On then to our big spotlight for this evening. Someone once very famously said that if you were to put 5 economists in one room and ask them all the same question, one might get 5 or even 6 different answers. No wonder then that economists like to fiercely disagree with each other. One major bone of contention that came up during IMF's Advancing Asia conference that took place over the weekend in New Delhi was between two internationally celebrated economists, India's Arvind Subramanian and Financial Times' Martin Wolf. The intellectual duel was over what model India should adopt to grow its economy. Subramanian said, and I quote, "India can't deviate from the historical experience and grow at 8% without rapid exports and just depending on domestic demand," unquote. This drew a sharp response from Martin Wolf. I caught up with the Financial Times columnist for a quick chat after that seminar, and this is why he disagrees with Subramanian. You don't want to miss this. Well, Martin, there was a clear, sort of difference of opinion between you and Arvind Subramanian. Arvind Subramanian said that India cannot afford to ignore the export-led model that has been followed by many of the East Asian economies. But you said in the West, going to the kind of support that, globalization, it's quickly dwindling, and India cannot be banking on that. Why don't you just expand your views a little bit more on that?
Well, the specific issue was the role of export-led growth, or very rapid export growth in services. And Arvind Subramanian hoped that India could achieve enormous expansion. All I was arguing is that if your markets are the West, and so far your exports of services, particularly financial services, have been predominantly to the West, not elsewhere, that people are very concerned about the position of middle-income people in those countries. There's the squeezed middle, the loss of the jobs. Most of these people are working in service sector activities. They're threatened by automation technology as well, and the political resistance to accepting more import of services, particularly if it involves movement of people, which is an important part of it, is very great. So I would like to see more opportunity, but it seems to me realistically, India cannot assume that in the Western world, at least, these exports will grow rapidly unless you innovate completely new services. And I think that India needs to look at emerging markets as well if they're going to achieve this.
And that's largely because of the political narrative that's playing out in the US, whereas you said that, the issue of globalization is at best, varies from ambivalence at best and indifference at worst. Yeah. So you don't see that changing anytime soon? No. After all, remember, take the US. It's very bad in Europe too, but take the US. They actually have had a reasonable recovery since 2009, so it's 7 years of recovery. Unemployment is low. The growth hasn't been strong, but it's been a reasonable growth, about 2% a year. And yet you can see, even after this, how strong the resistance to trade is and to immigration, which is linked to this with services. I don't expect that to get better because it's about rising inequality, rising insecurity, a rising sense that the decent jobs in the middle are going. Remember, most of the decent jobs in the middle of our economies now are service jobs. They're not manufacturing anymore. So if India's comparative advantage is in services, it directly clashes with this. And I think one has to accept the reality. Not that there will be no opportunities, but that it's going to be quite difficult and quite challenging. And you cannot assume this economy will grow at 8 or 9%, 7 or 8%. Its exports grow at least that fast, when we're growing at 2% or 1%, and the exports will grow to us. That's going to be very difficult. In fact, and there's also a risk of increased automation, which you also alluded to.
Yes, the two things, it's the two blades of the scissor.
Right, two blades of the scissor. Martin, one more thing. In this context, that you've laid out for us, where does the Prime Minister's manufacturing push and thrust comes in? Because Arvind says that export will, he anticipates like services or higher skill sectors to be exporting more to the West. So in that context, especially in India, the manufacturing thrust that Modi is trying to put in, how does that fit into what you're saying?
It seems to me, in theory, very sensible, because a big economy like India should be doing everything. It should be doing services and it should be doing manufacturing. But that means both cheap labor services, cheap labor manufacturing, and skilled intensive manufacturing, not capital-intensive manufacturing, not steel or anything like that. But those are things that they have to push hard here in India. And it's the diversity, the potential for diverse exports that India must exploit. But of course, to do manufacturing exports, India must invest massively in skills, it must invest massively in infrastructure, and it must make its economy completely open and accessible for the world's manufacturers, because you don't anymore manufacture single products completely. You have to be part of value chains. So if that's true even for the developed countries, it's not just so everybody's part of value chains. So India has to accept that its manufacturing will be part of global value chains. If they do that, I think the manufacturing potential remains very substantial. But there has to be real determination to exploit this. Now, I followed Indian trade policy since the 70s, and India's always been ambivalent about really opening up on manufacturing. And as long as that's the case, other countries, Vietnam, so forth, will do better.
Well, that was Martin Wolf in conversation with me, always ready to air his views openly. But an interesting narrative is panning out as far as India and China is concerned, because Subramanian believes that India cannot ignore the export-led model that has been followed by East Asian economies like China, and cannot solely depend on domestic demand. But the complete opposite is happening in China, where of course the Chinese are now trying to spruce domestic demand, and therefore a major restructuring is happening, something that Martin Wolf believes is perhaps not the way to go. Moving on then.